Let's now take a quick look at the markets and see, how we're holding up this morning. It's definitely, like I said, a historic day for us. We crossed 13,000 right at the beginning of the session. And what's really encouraging is that we've held that position, right? We haven't really sold off. The Nifty is currently up 0.73%, so 13,021. And doesn't matter where you look today. It's a sea of green. The bank index is shining. It's up nearly 2%. The auto index is up nearly 2%. The mid-cap index is up 0.6%. So it doesn't really matter. The breadth is really positive. You have 28 of the Nifty stocks advancing and just 22 declining. From the winners, we have an Adani Ports, an Eicher Motor, a Maruti, an HDFC Bank, a Tata Motor. So quite a good, healthy mix from various sectors. And then on the losing side, you have HDFC Life, IndusInd Bank, GAIL, Sun Pharma, and then a Reliance. But nonetheless, no steep cuts seen on this. And considering that Reliance is losing today, nearly down a whole percent, for Nifty to be where it is really shows you that the participation is picking up from the rest of the market. So looks like the bulls are firmly in control. Let's see how we close down the day. And of course, if there's any sharp uptick or downtick in the Dow futures, that might impact the way our markets are moving. We now also have an interesting bite for you. CLSA's market strategist Lawrence Belanco has upped the Nifty target now to 13,500 and 13,700. He sees banks and IT primarily driving the surge. Let's listen in.
We've seen the Nifty break out through the highs that we made in 2019. So that resistance zone, which was roughly at the 12,300 area, we've cleared that. And we're really focusing now on 13,500 to 13,700 as the next target level. In the near term, markets are extended if you look across global markets, that is. But I think the key takeaway is momentum has confirmed these highs. So we think any pullback, particularly back to the old breakout area around that 12,200 area for the Nifty, would be an attractive entry point for the trend to continue. Banks have been key drivers for the Nifty since 2016, and it's really only the sort of past 6 months that we've seen that underperformance. We have seen the banks in relative terms over the past 3 months at least base out relative to the Nifty. And yes, the global rotation that you've seen into the more value side has seen the Nifty banks sort of resume that leadership. We've cleared the 200-day, and the next resistance zone for the Nifty Banks Index is at the 31,000 area. And as far as leadership goes, I do think it replaces the IT sector as a key driver for the Nifty on the upside to new highs again. Outside the banks is in the Indian auto space. So we have seen some of the laggards there. After a sharp recovery off the March lows, a number of stocks like Tata Motors or Eicher Motors had been consolidating for the past 3 to 4 months, and we've now seen those stocks break out of those trading ranges. So if you're looking for sort of fresh breakouts, I would look at the Indian auto sector. And then outside of that, you mentioned Reliance in the introduction, rolling over and underperforming. We've actually seen rotation into the small cap index. So if you look at the Nifty small cap index, that had been consolidating since September.
All right, that was, of course, a market veteran talking about where he believes the next leg of the rally will come from. But what's important is that he believes that the rally will continue. And obviously, investors on Dalal Street will be cheering that. Let's pull up the BNSN stock cloud for this morning and see what we have for you lined up over here. 10 stocks that are looking fairly interesting for various reasons. Should be popping up on your screens any moment now. But I'll begin. We have a Coal India on a not too positive note. They had a strike notice served to them by various unions. So they'll be, working through that. We then have a Balkrishna Industries, which is getting buy calls across brokerages and making new highs every day. That stock definitely in focus. We have a Wockhardt because a huge pledge has now been lifted off the counter as of November 20th, and that's got it invigorated. It's moved very sharply in the last few trading sessions, and in fact, it's gained very smartly over the last month. We then have two stocks that are, connected, AU Small Finance and Aavas Financiers. AU incubated Aavas, and now Aavas stake yesterday was sold off by AU to generate some capital. So that's just some, value unlocking update for you. We then have Exide, which is increasing its JV with a key European partner to 80%, so that should augment their capabilities. We have a VMart. We have an Ingersoll Rand as well due to the government OFS. We have HEG because it seems that electrode prices for graphite electrodes are really bottoming out and the outlook is improving considerably. And then we have a First Source, which has just delivered fantastic results, great shareholders, and that stock also looking at some interesting deals coming up in the near future. So that was the BNSN Stock Cloud for this morning. I believe our guests are now ready, Kunal Bothra and Rajesh Agarwal, to talk to us about the technicals and fundamentals of the market as they see it. So good morning, gentlemen, and thank you both for joining us here in BNSN. Kunal, coming to you first. Bulls definitely in control. We're defending 13,000 on the Nifty. We're not selling off. And this is after we've seen 5 to 6 sessions of us coming up to 13,000 and then, being unable to cross that hurdle. So we've done that today. What's your sense on where this market's headed, and what's your high risk and low risk idea for today?
So good morning, Varun. Again, I think it's a very important breakout for the index. 13,000 break on the Nifty. I think it's something which most of the bulls were waiting and with bated breath. So I think finally that break of 13,000 is here. Now we have to try and understand the run up towards the rally towards this 13,000 mark. It's not been just a single day move or a move which has gone up into just few sort of stocks and sectors. I think it's been a very holistic kind of a move. It started off with the Nifty IT and the pharma stocks doing pretty well. Then it moved on to the auto stocks, then banking, financial services are the late ones which have managed to pick up pace quite strongly. So you have those classic ingredients of the rally in the making, which is where I believe that this rally is a bit completely different than what we've seen earlier as well. So I believe 13,000 is just another level. I think what is more important is that this trend which you've seen and the market internals which you've seen, I think that health of the market needs to get improved quite significantly, even at every level on the upside for the index. Until the time the market internals are strong, I think the Nifty would probably try and scale up much higher from current levels. So all I think the bulls can do right now is just have a trailing stop loss mechanism, and you can hold on to your long positions. I think now 12,800 could be a reasonable short-term support for the index. And keeping that in the regards, I would suggest a couple of buy calls. The first one is a buy on Eicher Motors from the auto pack. I think Eicher Motors is yet another stock which is trying to make a strong comeback. It's already done pretty well for itself this month, up by more than 25+%. But I believe even on short-term charts, there are some signals of breakout coming in for Eicher Motors. So I would suggest this as a buy. Short-term targets should be kept at 2660. Stop loss could be kept at approximately 2560 levels. Second is a buy on Rain Industries. Now this is interesting because from the mid-cap arena, I think Rain Industries is something which looks extremely attractive to me on charts. It's forming an inverse shoulder pattern on the slightly long-term time frame, so more on the medium term, on the monthly charts, and on the short-term charts. I'm talking of the hourly time frame now. It's forming a bullish flag and a pennant formation. So again, both the combinations of the monthly charts looking promising and the short-term charts inching towards a strong breakout. I believe Rain Industries could be another high beta mid-cap name which could do pretty well for itself from current levels. So that's also a buy. Targets could be kept at 135 levels and stop loss at 105.
All right, Kunal, thanks for your trading calls. Rajesh, hi, morning. What are your wealth creation ideas from medium to long term?
Morning, Karanya. Morning, as far as high conviction ideas for medium term is concerned, as Varun said in his opening remark that graphite electrode prices are bottoming out, and we have seen graphite electrode prices increasing by around 25-30% in Chinese market. And not to forget the kind of run-up which we have seen in steel sector, I think graphite can be one of a good stock to look at. The stock has corrected very deeply in the recent past, and I think the valuations are quite attractive, and it is one of the largest company by capacity. It's one of the largest company by capacity to look at Indian markets, with 4 plants in India and 1 plant in Germany. And the graphite electrode price, as we discussed, has already bottomed out. The demand is going up with steel industry opening up. But with valuations being attractive, the only concern is exports to Iran, which we think would be taken care of. And the best part is needle coke, which is used as a raw material for graphite electrodes, is a crude derivative, and connected with crude. When the crude prices are down, the raw material prices are on a pretty comfortable level. That gives a comfort on margin front also. Hence, we would recommend buying in graphite with maybe at a target of 20-25% from the current market price in a time horizon of 2 quarters. The other one would be a mid-cap cement stock, Dalmia Bharat. which if you look at the numbers, this quarter has been pretty good, a good jump in bottom line. With 1,457 rupees EBITDA per ton, it is one of the highest in the industry. They have taken over Murli Industries, the merger of which has been almost complete, and the integration would start showing results in the coming days. Even the expansion which they are going through would be completed by FY23, and then there would be a huge jump in margins as well as bottom line. In the present scenario, also the valuations look very comfortable, and we would recommend a buy on that with 20-25% upside in the next 6 months.
Rajesh and Kunal, thank you so much for that. Request you both to stay on with us. So when we come back after the break, we'll address viewer queries. But before we slip into a commercial, here's Jayesh joining us to take us through Nifty's journey from 12,000 points to 13,000 points.
Who would have thought that the Nifty would scale past the 13,000 mark and the year would still be 2020? But that's the reality that we are facing at the moment. The Nifty comfortably above the 13,000 mark. But you know, what's concerning is the pace at which we have reached from 12K to 13K. Of course, there's been a lot of downside that the market has had to encounter due to the COVID-19 pandemic. It plunged to as low as 7511 before recovering to 13,000. So it has taken exactly 551 days for the Nifty to scale from 12K to 13K, and this is the second slowest 1,000-point rally that we have seen in at least over 5 years. So which stocks have actually contributed the most have been Reliance Industries and Infosys, more than 400 points each that they have contributed, along with HDFC Bank, TCS as well as Kotak Bank featuring in the top 5. On the downside, you have the likes of ITC as well as IndusInd Bank that have contributed about 200 and 100 points on the negative side respectively. And then you have heavyweight counters like SBI along with Axis Bank and L&T that have also contributed nearly 100 points each.
Okay, thanks for that, Jayesh. So we can clearly understand what's driven the last 1,000 points in the main index. But on that note, let's slip into a quick break on Buy Now, Sell Now. Stay tuned. We'll be back shortly.
Welcome back. You're still watching Buy Now, Sell Now, and it's time to touch base again with Kunal and Rajesh to help with our viewer queries today. First up, we have an email from Paras Arora based in Delhi. He's bought 50 shares of Maruti at a price point of 7,100 rupees each. Wants to know whether he should continue to stay invested or exit. Kunal, how's the chart looking like for Maruti? Our viewer here has made some decent amount of money, but is there scope for more, or should he exit and look at some other stock maybe within the auto space?
So I think it's a very good stock to really buy and hold. I think if you are looking at it purely from a longer term view, I don't see any reason why you should fret away from your investments in Maruti. I think the only concern over here is your time horizon. So that's the only I would say filtration which is required for you. If your time horizon is long term, and by that I mean substantially higher than maybe 1 year to 3 years plus, I think if that's the kind of time frame, then I believe buying auto stocks at current levels is not a bad bet. Short term wise, it's possible that many of these stocks can go back into their overbought territories, and you might see mild corrections or sideways price action. Take for example for Maruti, for the last I think 1.5 odd month, the stock had remained absolutely sideways. 7,300 or 400 was the upper end of the trading range, and closer to 6,600, 6,500, we saw the stock taking a lot of support. So it was trying to consolidate in this range. It's trying to show signs of breakout in the short term charts as well. But more importantly, I think it's very important that you define this holding, in terms of time frame. If it's substantially long term, then I believe we should definitely hold on to your investments on Maruti.
Thanks for that, Kunal. Rajesh, what about you? Do you concur with what Kunal just had to say? And what do you think the long-term prospects for Maruti really hold for investors?
Definitely, yes. I would second Kunal's view that if time is not a constraint, one should stick on to with Maruti. Not only stick on, but if there is some kind of dip in the market, it would be a good opportunity to accumulate. We have seen month-on-month numbers coming very good. It's a leader in passenger vehicles with around 65% market share, the overall market share being more than 50%. The new launches have been taken very well by the market, and with the kind of pandemic and all, people are going to vouch for personal vehicles, I would say. So that would again be an impetus to the auto sector as a whole. And Maruti being one of the market leaders, I think one can very well keep a target of 8,000 odd levels in the medium term and stay put with the stock.
Both our experts seem to share the common view on Maruti in that it remains a solid investment. So just continue to hold would be the most prudent advice. On that note, I think we're slipping into another quick break here on Buy Now, Sell Now. Stay tuned. Okay, excuse me, we're not going to break right now. Instead, we are going to talk about JP Morgan's latest downgrade. And we don't really hear of downgrades too often, but they've come in and they've actually cut their outlook on Eicher Motors and on Hero as well. They're very cautious on two-wheelers. They've downgraded Hero to neutral and Eicher to underweight. And they believe that the volume tailwinds, i.e. the pent-up demand, channel restocking and personal mobility boost is now receding and it has kind of peaked off. The demand fundamentals for two-wheelers appear vulnerable in their view, and there will be some margin headwinds as well. So big downgrade coming from a very prominent broker. It might just impact the prices, so keep an eye out for that one. I think we'll slip into break now, and then we'll be back with more updates shortly.
Let's now take it across to the management of Maruti. We had a conversation earlier on in the day about festive demand and view going forward, how things are panning out, what are the key trends. Let's listen in.
Karna, the retails have been pretty good right through the festive season. As you know, the festive season is in auto terms classified into three parts. First is the starting from the Navratras, the 10 days of Navratra, including the Dashara. And then there is a 15-day in between, and then we have the 5-day Diwali period, starting with Dhanteras, ending with Bhai Dooj. So I think it's an entire 1 month period. The retails were pretty good. And in fact, if you look at October separately, because remember this time, this festive season has actually has fallen partly in October and partly in November. Whereas last year, if you compare it with last year, where the entire season was in October. So even if you compare October to October of last year, then also there seems to be a pretty strong retail sales. In fact, the wholesale was 330,000 in the industry, and the retail was 370,000, indicating actually a reduction in stock from the beginning of October.
So if we look at the final leg of the festive season, the 5-day period that you were talking about, is there a number that you could share with us?
Yes, we have already. So if you look at the last, the 5 days period, the deliveries were roughly between 41,000 or so, 41 to 42,000. Normally in this period, like last year, the deliveries were close to about 40,000. So that's the range in which the deliveries happened for the last 5 years, if you see 39 to 40,000. So this time I would say it was marginally better in the period of that 5-day period which you are referring to.
Would it then suffice to say that the second half of the year is likely to be solid, or are there any short-term roadblocks that you still foresee?
So when we see the current levels of inquiries and booking, then we are confident, obviously, of coverage till December end. However, going beyond that, remember the current demand, we believe there is a lot of pent-up demand element in it. As you know, Q1 was a washout in this year. So I don't know till what time the pent-up demand continues, but and we'll see to that. But there is some uncertainty beyond the Q3, which is beyond the December period, because as you know, the long-term steady-state demand for automobile depends on the fundamentals of economy and also on the sentiment, because car buying is a discretionary purchase. So we are not so sure which way the sentiment will move, and largely that's because of the COVID situation. So you could have an upside if you have a vaccine sentiment, going positive, or you could have a downside if the number of cases increase, or if there is a second wave or a third wave, whatever, as we keep hearing in the news these days. So a lot of the things are uncertain, and that's the reason why most auto industries are apprehensive of giving forward guidance beyond this short-term period of this quarter end.
So, last month as well on the analyst call and to the media, you had refrained from calling out a decisive recovery beyond festive. So the company's stance is as is, right? There's no change, or there's no forward-looking projections that you would like to make, even for the short term.
That's right, because beyond December period, as I just mentioned, there are many uncertain elements, and we are really not wanting to give a forward guidance without being sure.
Let's talk about the numbers that we have so far. If we look at October sales, Mr. Srivastav, as many as 7 out of top 10 selling passenger vehicles were from the Maruti cap, and it comes as no surprise really. Can we say that there is still a clear preference for small vehicles, which perhaps had a big role to play in this kind of a trend?
So if you look at even in the last year or in the year previous to that, which was 18-19, then you look at 19-20 and 2021 so far, 7 out of the top 10 models in the country are actually from Maruti Suzuki. In fact, 8 out of top 11, because the 11th one is also Maruti, are I think that actually refers to the very good portfolio of vehicles which we have across all segments. So it's not just the entry-level cars, but also, for example, I'll give the example of Vitara Brezza in the SUV segment, and also it's or Ertiga, for example. So it's across. But I will agree with you on this current year's segment. The hatch segment has actually done much better, and the other segment which has done better is the SUV segment for 2 different reasons. The reason for hatch seems to be that people post-pandemic have downgraded their choices towards a lower end. But the SUV, we have seen a lot of activity in terms of new introduction, and that is perhaps the reason why an SUV longish term has always been in the past few years being that the design preference is towards SUV, which we observed in the last 5-6 years, with the resultant SUV share going up from about 12-16% to today 34-35%. And remember, in the top, when you ask about the top 10 models from of the industry, Vitara Brezza is the model which is also an SUV in the top 10. So Vitara Brezza actually is the #1 brand in the entry SUV segment, even though we have seen a lot of activity with the introduction of the Sonnet as well as the Venue from the competitors. But I think the reason why Vitara Brezza has been doing so well is because of its large petrol engine, where consumers are wanting a very smooth and a sophisticated performance of a petrol engine, and there seems to have been a shift towards the petrol across all segments, including the SUV segment. The entry-level SUV segment, actually 62% of diesel it was last year, has become less than 30% this year.
You just got me to my next question. Talking about Brezza, it does lead the entry SUV segment. But
Yes.
If we look at the trend, it is the mid SUV segment which has grown in size in the recent times. What is the strategy to gain share there? If you could talk to us about anything that's in the works or anything that the consumers should be looking forward to.
Yeah, so just for your information, actually the mid SUV segment was much higher than the entry level SUV segment till about 3-4 years back. And ever since the Vitara Brezza came into the entry SUV segment, that segment actually grew larger than the mid SUV segment. So if you look at the last year's figure, this total SUV segment is about 7.3 lakhs. Out of which about 3.8 lakh is the entry level segment, and the mid SUV segment is about 3.6, I think, or thereabouts, 3.5 or so. So I think last year the entry SUV segment was much bigger. Probably this year there has been a good number of vehicles coming into the mid SUV segment, with the resultant increase, including the S-Cross from Maruti Suzuki. with the BS6 1.5 liter petrol engine. Yes, so this segment is obviously grown large, and a lot of the industry players would be interested in this segment. And we are very closely watching the different segments, which are sub-segments which are emerging within this overall SUV segment. Of course, I will not be able to give you a forward guidance on the project, but as on the products. But as I said, Maruti Suzuki always has a very strong product portfolio and a very strong product plan. We are quite positive about the Indian economic growth story and in the future, the auto industry as well. So we have a very strong product plan, and we will continue to watch this segment also very closely.
I just had another follow-up question for the hatchback segment. Last time when we interacted after Maruti's quarterly numbers, you had revealed that the share of hatchbacks has gone up to 62%. Firstly, I'd like to know, do you think it could perhaps go up further given your revenue pie and the changing consumer preferences, at least over the short term? And the second part to the question will be, to what extent do you think it's because of rise in first-time buyers and rural demand?
Yeah, so I think extremely a good question, and I think it is. This has been this can move up. But I think we also observe that it has been fairly. This segment seems to change very slowly in terms of this share of the overall pie. So if you look at in the industry, of course, for Maruti Suzuki, it is 62-63%. But for the industry, this share of hatch has been about 45-47% for the last 3-4 years. It's moved up marginally this year, largely because of Maruti Suzuki's strength in this area. So I think it may move up marginally, but I think the larger point which you make, and which I completely agree, that ever since this COVID thing happened, consumers have replaced their aspirational buying with more of functionality. So they are moving away from shared mobility, from public transport towards personal mobility. So you see the first-time buyers have gone up by about 4-5 percentage points. In our portfolio, first-time buyers have gone up from about 43-44% to almost 48-49%. So that's a pretty large jump. The additional car buying has gone up by about 3%. But the replacement car buying has come down by almost 8 percentage points in the industry, which means that people are holding on to their older vehicles a little longer. And the second point about the rural markets, yes, the rural markets seem to have bounced back much quicker and much earlier than the urban areas. And there are pretty strong reasons for that, including a fairly widespread monsoon being about 8-9% higher than last year. Then this Kharif sowing has been much larger, about 7% higher than last year. The Rabi crop has been about 151 metric tons, which is about 6% higher than the last year. The MSPs actually has gone up for paddy, for example, gone up about 1,500 rupee a quintal. So I think a combination of this, including the fact that the COVID thing has happened largely in the urban areas in terms of the containment zone or hotspot areas, whether it's Delhi or Mumbai or Pune, Ahmedabad, Chennai, etc. So I think all that has led to the rural demand being higher. And yes, in rural demand, there is a lot of sector-specific demand, which means that these hatches and the vans, for example, have a larger share in the rural areas. So I suppose that also reflects in some ways on the segment-wise share that you referred to.
Maruti has been working in the rural market for many years now. You were one of the first ones to really, to scale it up quite meaningfully, your business, your network, your dealerships as well in rural and semi-urban areas. Given the uptick that we've seen, the buoyancy that we've seen in demand, do you think it's sustainable, or could it perhaps moderate in a couple of quarters?
I think it's not just a short-term phenomena which we have observed in the last few quarters. In fact, if you look at the 10-year timeline, then the rural growths have been higher almost every year than the urban growths. And I think part of this is because of the fundamental changes in the economy. The economic growth, the results of the economic growth are also being seen in rural areas. So the rural incomes have actually been growing up faster than the urban areas. So although it's still less than the urban income levels, of course, but what we have seen is that this trend of rural growth being higher than urban growth we have observed for the last 10 years, not in just the last couple of quarters, with the result that what was just 10% of our overall portfolio sales was rural back in 2007-8. It is now 40% this year so far. So I think this phenomena of will continue, I suppose, or how fast it will continue is a different question altogether. But I think going by the trends which we have observed so far, this trend should continue even in the future.
Mr. Srivastava, let's talk tech and online space. You've been one of the early movers in the industry. Maruti had commenced online bookings back in 2017. Going by the reports, you recently sold about 2 lakh units with over 21 lakh digital inquiries since April 2019. So if you could tell us, has the large chunk of these inquiries and bookings come in the period after COVID and after lockdown, or did you see it actually picking up so phenomenally in the last 1 year?
Yeah, so in fact, the story goes back to about 3.5 years, which was 2016-17, when we realized that this seemed to be the trend, that people have started taking increasing interest in online purchase and also in having the inquiries done through the web. At that time, it was just 2-3% of our total inquiries used to come from the digital platform. We started, improving on the digital platform in these years, with the result that if you look at last year, then the inquiry level which had come from the digital platform was about 16%. So that 3% has become 16% in about 2.5 years. However, post-COVID, we find that this inquiry levels are now about 35%. So that's acceleration from 16% to 35% has taken place in just these 2-3 quarters, about 8-9 months actually. So which we believe is irreversible now, that this trend should continue. So that has been what pandemic, I think, has done, is accelerated immensely the already trend of greater digitalization. And thankfully, Maruti Suzuki had identified, we didn't know the pandemic, of course, but we did identify this trend. And our digital platform is, I would say, one of the best in the industry, in which even the financing part, which is about 2-3 touch points of the total consumer journey, is also now digitalized, something which is unique in the industry, and it's not done by any other manufacturer in the country.
Mr. Srivastava, one can totally understand the 21 lakh digital inquiries, but you've also done a 2 lakh worth of sale online. Talk to us about how the consumer acceptance has evolved, because if it were to me, I would be a bit wary of buying cars online completely without actually physically seeing the look and feel of it, going for a test drive, etc. So how does it work?
Yeah, so actually the sale which you are referring to is not as if the payment and everything has been done through the online. It is basically the source of inquiry, which is the online, which has resulted into the final conversion. Remember that in automobile, we always talk of phygital rather than digital. And the two parts, the 2 touch points, which I think has not worldwide not been able to be digitalized, is the actual test drive and also the actual delivery. But what digital refers to is, and most research now point it out, that 94% of the buyers of the car buyers, they actually start their process and investigation about which car, research about which car to buy online. And 47% of the car buyers actually decide before they come to the showroom which car they are going to buy. And that brings the strength and the power of digital space in the entire car buying process. And remember, it's not just a urban phenomena. In both urban as well in the smaller towns, this phenomena is equally powerful, and it's really important now for a good marketer to strengthen their digital platform.